Now, inevitably, what's interesting to me is Jeff will look at this valuation and he'll say, man, it's worth at least $100 million, but it's probably worth 150 today. If you take my house and my other assets and so on and so forth, which is about $10 million, I'm worth $160 million, which is absolutely not correct. So Jeff's wealth is not the 150 million. In fact, it's not even the 100 million. So the wealth that Jeff owns is, of course, his personal assets, which I just said were $10 million. And it's the stream of cash flow that that business is generating. When I talked about valuation, right, 100 to 150 million, I'm talking about prices, right? I'm taking valuation and I'm turning it into a price, which is 100 to 150. And price is just an opinion, right? It's opinion as to what the market would value that stream of cash flow today. So let's think about this for a second. Equity or stock in a business. So Jeff owns equity in his business. Equity is nothing more than a claim on future cash flow. And the value or the price of that equity is just an opinion in the market as to what that particular stream of cash flow is worth. So Jeff's wealth, if we said 150 million is likely what his business would sell for today, it's not his wealth. That's the price of his business. You know, markets change. There's market cycles and they change constantly. And when you look at industries that go through consolidation, for example, you know, you might have the beginning of an industry consolidation where typical companies are selling for 6 to 7 times EBITDA. During the heady, hardcore days of hot consolidation, that might ratchet up to 12, 13, 15, 16 times EBITDA. And then, of course, very quickly fall back down. And so in the course of the consolidation bubble, the valuation multiples went up. So the price or the value of the business went up, but the real wealth, which is the cash flow of the business, did not change. That's Jeff's actual wealth. It's the cash flow of the business. It's just how the market interpreted the value of that stream of cash flow. And I think that's very, very important for business owners to understand, that their wealth is not really the wealth locked up in the business, so to speak. The wealth is a stream of cash flows that the business generates. And the price, again, is a market's interpretation today in real time as to what that stream of cash flow is worth on the open market, what it's worth to a financial buyer, what it's worth to a strategic buyer, what it's worth to cousin Eddie, will all have different values on the valuation spectrum. And if you as a business owner can start to think about things that way, it's going to really help you make a lot of decisions. It's going to help you allocate capital more efficiently, and it's going to help you really understand when you should and should not exit the business. What I hear most often from our clients here at Potomac is the extreme value in working with us years in advance of a sale. Not only do we help establish a fair market value in a range of investment values for the client, but we provide them a roadmap of everything they could possibly do in order to increase value and decrease risk in anticipation of a future sale. If you've got a sale on the horizon, whether it be 6 months from now or 5 years from now, we'd love to have a chat with you. Please use the contact form below in the description to reach out to us today. And feel free to share this masterclass series with somebody who you think might benefit from it. Again, I'm Giannamore. Thank you for joining me today, and I'll see you on the next one.